Hello, my name is Jason Reichl, and you're listening to Risk Management Brick by Brick. I'm fascinated with people who are helping build and maintain the physical world around us. On each episode of this podcast, we'll dive in with a risk manager, speak to them about how technology plays a role in this process.
Thank you for joining me, Henry. I really appreciate you stopping by. We're in a little room on the show floor at ITC. So why don't we give a little bit of how did you end up at ITC? Like, boil yourself down into 2 minutes. Who's Henry?
Sure. Well, maybe I'll start off with Arity first.
Yeah, let's do Arity
Why
first.
Arity's here at ITC. So we're here at ITC because we essentially consider ourselves an insurtech. We are part of the Allstate Corporation, but in 2016, Allstate kind of spun us out into our own separate company. So we're essentially a startup, and we're focused on driving data and using driving data to make transportation smarter, more useful, and more economical for everyone. So we're here to kind of spread the word on the data products and analytics that Arity has to offer to whether it's Department of Transportation, whether it's insurance companies, whether it's marketers using driving data to generate marketing leads. So, we're here to get the word out of what Arity is about and how we can help.
And what's your role in the company?
So I'm director of product management, specifically outbound product management.
Yeah.
And so I've been with Arity for about 3 years now. But before that, I used to work on the insurance carrier side.
Okay.
So I used to work at the Hartford, and I actually stood up and launched and managed a smartphone-based telematics program within over 40 states for the Hartford. So you could say I know a little
about data,
about data and driving data and telematics.
So what's so exciting about what you like, the driving data? What's so exciting about where we are right now that we were at 5 years ago?
So I think the biggest difference is the scale of data available. And to provide some context on what that means, so Arity has almost 2 trillion miles of driving data collected to date. We collect about 1.3 billion miles of driving data every day, as well as 130 million trips a day, right? So it's a lot of data, massive data. And so I think that's the biggest difference. And what that does is it introduces the opportunity to leverage that data for different purposes. So one purpose is insurance pricing, right? So we have over 40 million active connections where we have historical driving data on drivers within the US. So that's about 15% of the US driving population. So say, Jason, you're out shopping for insurance, right? Your carrier might ask you, could we check to see if we have driving history data available on you? And if you provide your consent and say, sure, they'll reach out to Arity and say, hey, do you have driving data on Jason? Yeah. And if we do, we'll hand it over to the insurance company, and they'll use that data to help price your insurance right there and then. So that means that if Jason is a great driver, which let's assume you are, right?
I'm not, but
let's assume you are, you might get like 25, 30% discount right there when you're quoting for insurance. Yeah. And the reason why that is, I'll say, is novel is because traditionally telematics program you have to wait. There's a monitoring period. You have to the insurance company will give you 10% discount right now, and then they'll say, okay, but download our app, drive with our app for 6 months until your next renewal, and then at that renewal, we'll determine whether your price should go up or down based on your driving behavior. Right. There's none of that required here, right? If the insurer has your driving history already available, they could use it to price you. So the benefit to the insurance company is profitability, right? The
real-time pricing models.
Real-time pricing, but then to the consumer, again, the reward of being a safe driver with better premiums.
One of the things that is interesting is, as insurance companies, we're told that it's based on historical information, right? But what we're finding is we are now in a different time, an unprecedented time, right?
Correct.
So what are you seeing innovative carriers do you see innovative carriers trying to move towards analyzing closer to real-time behaviors, right? That seems to be a trend.
Yeah, so we have a number of carriers that we've signed up as clients with regards to this point of sale pricing product. So it's called the Arity IQ.
Yeah.
And again, it's a network of both driving data that comes from mobile apps or connected cars. So we have relationships with Toyota Connected Analytics Services, with Stellantis and Ford. And so that's on the connected car side. But then we also have relationships with mobile apps that consumers use every day.
Yeah.
So a large one is Life 360,
Right.
if you might be familiar with that, right? So we power the crash detection feature within Life 360. And in exchange for that value being provided to the consumer agrees to have their driving data collected by Arity for future uses, such as in insurance pricing discounts and other kind of marketing type offers. And so, we're able to kind of then provide that information to insurers. It's kind of like it's the new credit, but with driving data, right? Because with credit, I don't know if you're familiar, because it's actually comes as a shock to a lot of people that insurers typically will take into account a user's credit score in determining their insurance price, right? And people are like, well, what does that have to do with how I drive, right? But what they do is they ping the credit bureaus to get that information. But in this case, they ping Arity to get the driving information. And we're really excited about it because we think that's actually maybe a more fair and equitable way of pricing, right? Because it's based on an actual measure of driving risk. Things like credit, education, your gender, where you live, right? Those are just proxies of risk. And a lot of those, like you as a consumer, you don't have control over that, right? You're driving, the way you drive, you have control over that.
So it's beneficial in two ways, because you're allowed, you could look at this data at a regional level and say, okay, here's the generalized risk, which is what insurance loves to do.
Right.
And then you can be competitive by offering something that's specific to a user if you can get that information, right?
Right.
And I think what's interesting about that, and it's a common thread in a lot of different organizations, a lot of them are getting their different ways. Some are trying to do AI plays, some are doing connected plays, all this kind of stuff. But it's this idea that what's worked in insurance works.
Right.
But if we want to have a competitive edge, we need that real-time information to have the trust that we need to have in order to make these consents or offer something better.
Right. Yeah, because think about it. If you have insurer A and you have insurer B, if insurer A has access to this real-time insight into how consumer drives, that really gives them a competitive advantage in terms of their ability to set appropriate rates for both growth and for profitability. Company B, if they don't have access to that, well, then they're exposed to this concept of adverse selection, right? So that means that if we have like Stacy who's shopping for insurance and she's a really bad driver, well, company A has Stacy's information. They'll price her appropriately for that risk. That price might be high. So Stacy might go to company B. Company B doesn't know
about bad debt.
Right, exactly. And so that's definitely a real kind of risk that insurers can face.
And when you're talking about real-time data, like say you pull this on me, this is just, I'm curious. How can you, like when people drive, like say you had this data on my daughter's car, she's 16, and by 18, she's a very different driver. How specific can you guys get? And what's the value of looking at someone over a long period of time or looking at a very short window? Is there a difference in those two things, and what should companies be looking at?
Yeah, we do see that behaviors do potentially change over time, right? And it might depend, like even during COVID, right? Suddenly, like nobody was driving. The roadways were pretty bare.
Yeah.
But those who were on the roads, what did we see? We saw people like speeding. They were speed demons. But we also saw people talking on their phones more, right? So that was, and more before, like prior to COVID, right? So that was a shift in driving behavior. And so if you only have this kind of one static snapshot of an individual's driving behavior and you don't update that as time goes on, as circumstances change, well, then you might be missing out on kind of the, what the most recent behavior is.
And in the value, and this is kind of like, we're talking a lot about collecting massive amount of data, and carriers would want to have this data for themselves and hold it for themselves. But working with aggregators where you have all these relationships with OEMs and you have all this stuff, is that just giving people access to data that they couldn't get themselves, or is it making it more of like a equitable exchange for all these businesses that want to use that information? Like,
So,
what is the goal? Is it a moat goal? Is that what people?
Yeah, so I think it is providing kind of access to that data, right? Because if you look at carriers, their own individual telematics programs, if you add up all of those programs together, Arity still has about 3 times more driving data than these individual insurance programs.
Right.
So in order to get access
And
to
you're
that
only
data,
then proving your own hypothesis as an insurance carrier as well.
right?
Because you're looking
Exactly.
at historicals or whatever. And see, yeah, it's great.
Right, exactly. Because actually, so I don't know, fun fact for me, maybe not for you, we did this analysis of those drivers that are in insurance programs versus an analysis of, I'll just call general population, right? So a lot of drivers using these consumer apps that have nothing to do with car insurance, such as Life 360, Gas Buddy, My Radar, et cetera. And what we found was that the drivers in the insurance programs do skew towards more safer drivers. So there's this like self-selection bias, right?
Mhm.
So if insurance companies are just using that data to determine the risk, well, they have an incomplete picture of what driving behaviors are really like, right? Because the general population shows that versus those drivers in the insurance program, they speed more, they have more phone distraction, they're just riskier drivers.
So let's talk about with the idea of personalized data, with the idea of being able to go into a geography and set up a territory, how that could be used for new pricing, new product, new innovation within carriers.
Yeah, so for sure. So at Arity, we've been thinking about that, right? Beyond just kind of individual pricing, how can we take our really rich data set and view it from an aggregated perspective,
Right.
so that it could be used for traditional rate making? An aspect of traditional rate making is territorial pricing, right? But a lot of times insurers use historical data to both segment at a territory basis and then determine that risk on a territory basis. But guess what? Driving behaviors have changed, and they've changed significantly since COVID, right? Again, we see that people are speeding more. There's more phone distraction. We're seeing that, fatalities continue to be, I think is like over 40,000 fatalities a year, if not more in the United States. So road risk is definitely a problem. And so at Arity, we're actually working on a new product to use these aggregated insights that insurers could use for territorial pricing. Why? Because we have over 40 million connections, and that's across the United States. But we could take that data all the way down to zip code level, right? So just think about it from an insurer perspective. If I'm an actuary and I'm responsible for territorial pricing, I can have access to almost like near real-time data on current trends of risk on the roadway, and I could use that to maybe redefine my territory segments, or refine my territorial pricing. At least from my point of view, that would be pretty cool.
So theoretically agree, practically, where are carriers today with this idea?
Right. So this is a new product that we're looking to bring to market. We do have an alpha client that we're working with in regards to this. Really, some of the things that we need to work on is how to best integrate this data into the traditional rate making process, right? Because this is new data, right? Most insurance companies actually don't even work with telematics data. They don't even have their own telematics program. So it's like, how do I use this into a process that I've done the same way for generations?
Right.
So it's introducing the notion how to use this data within this current process to extract the value. So those are some of the things that we're working through right now on how to do that most effectively.
Last question I have for you. A lot of our audience are risk managers working in a company, mostly in commercial, right? What's the commercial application for, say, a regular risk manager who works for asphalt company X? Is this data being made available for corporate rates, making sure that you have your fleet under management with real-time data? Can they actually understand the risk of their GCs? Like, are you guys going all the way down the line of looking at how this has commercial applications for businesses as well?
Well, so to be honest, today Arity focuses more on kind of what's defined as the personal line segment, so personal insurance business. For auto, we're not really focused on the commercial space, at least not at this moment. But conceptually, this type of data,
people are driving
exactly
these fleets,
that could be used, and that fleet managers could use to help improve their risk. Right?
I like to ask this question because in personal lines, it's always where innovation comes because it can be direct to consumer and you can see if it works, right? And then what's this going to do for the commercial insurance is always the secondary question that starts to formulate in mind.
Yeah, but I think they're kind of comparable, right? They're not the same, but they're similar.
Yeah.
So at least my expectations would be that the benefits that could be derived from using this type of data in personal insurance would be similar within commercial insurance, right? So setting the right rates, profitability, growth,
choosing vendors who have good driving records, that you're going to put them out on the road representing your brand, all these kind of things that you don't get with an aggregate. Right. And then being able to use that to negotiate better insurance premiums with your carrier and all those kind of things are really beneficial.
Right.
Thank you so much for hanging out.
Yeah, no problem. Thanks so much.
Thank you.
Thanks. Appreciate it.
Risk Management Brick by Brick is brought to you by TrustLayer. Find out how TrustLayer manages risk so that the people can build the physical world around us. Head over to TrustLayer.io and then make sure to subscribe to Risk Management Brick by Brick on Apple Podcasts, Spotify, or wherever you get your podcasts. On behalf of the TrustLayer team, thank you for listening.